When it comes to paying off debt, it can be one of the most stressful situations you ever have. Sleepless nights, fights with your spouse or your significant other. Paying off debt can also give you the ability to have financial freedom, which is what we're going to be looking at today. 11 mistakes that are made when paying off debt. Now, a lot of people that I see make some of these mistakes, and unfortunately, paying off debt doesn't work out the way that they want to because they haven't planned to really pay it off in a reasonable manner, which is the first one we look at. When you think of a debt strategy, first thing you have to do is know exactly how much you have. What is the total debt? For a lot of people, this might be a very, very rude awakening or a very scary number. When you start tallying up all of the debt that you have in its entirety, we're talking mortgages, cars, personal loans, anything, credit cards, that is debt related. Student loans are going to be included to make sure you know exactly how much debt you're looking at and where you are. Now, again, you have to take this really with strides, because why this might be a mistake. A lot of people will cut back on spending. A lot of people will save money or look for extra money to pay all the debt back at once. There is a very, very systematic approach that you can use for debt repayment that you actually feel the effect of making progression instead of just putting, an extra $50 here, 20 bucks on a card, extra $100 to your student loans. If you're looking to really manage and tackle the debt, it is not so much about the balances as it is the monthly payment, because of course you only make so much money every time you get paid. X amount of it goes to debt. Whatever you got left over, hopefully it's enough to survive, and tackling that high interest debt first will make the biggest difference, and it will make the biggest bang for your buck. Now, does it make sense to pay it down all at once? It could in very extenuating circumstances. Now, what we talk about here is looking at a large bonus, a large tax refund, a windfall. Let's say you hit the lotto, something that is going to give you the ability to tackle the amount of debt. And of course, this is going to be very specific depending on how much debt you have and where you're at. If you're talking $3,000 to $5,000, might not be super hard to pay off. But when you're looking at some debt that I've seen range from $200,000 to $500,000 in debt, which of course, including a mortgage, which usually we exclude at that point. But when you start looking at auto loans, student loans, personal debt, credit cards, we start adding it all up. I've seen people that are north of $500,000 when they're sitting in debt, even without including the house, which again is kind of crazy. Now, a lot of people also take out payday loans. This, of course, when it comes to debt, this will crush you. When you look at payday loans, they're predatory lending, honestly. When you start looking at the annual percentage rate and you put it into, let's say, a 7-day period, you not only have finance fees, but you also have a percentage that you have to pay back. And of course, you're essentially stealing the next paycheck to get the paycheck now. They are probably one of the biggest, if not the biggest detrimental part when it comes to debt and when it comes to debt management is getting out those payday loans. Now, of course, this can be, again, devastating. And big one that I see, and this is probably one of the largest ones, is using your home equity. Now, a lot of people, consolidation, looking at a home equity might make sense for a lot of people, but the big thing with that is when you're using your house as kind of an ability or a giant credit card, if you will, using the equity in your home to consolidate debt might make sense, but are you changing the spending habits? Have you fundamentally sat down and seen exactly how this debt was accumulated? What is it going to mean when you make the home equity? Now, what I see in the financial industry is you do a home equity loan, we consolidate all of your debt, credit cards, your cars, everything is put together in this home equity. You also have to remember, home equity is putting your house as collateral. If for any reason, including job loss, you don't have the ability to repay the home equity, guess what? You're losing the house. That's right, the biggest asset that you have. You are going to be losing that in its entirety, which can be super detrimental. But like I was saying, when it comes to debt and putting it into a home equity, it's a great product if leveraged properly, because what I find is a lot of people will do a home equity. 3 to 5 years down the road, we do another home equity at a higher amount because they've accumulated a lot of new debt. 3 to 5 years down the road, same thing, rinse and repeat. The cycle continues every single time when it comes to debt because, again, the spending habits have not changed at all when it comes to debt repayment. Now, we also see a lot of people that liquidate stuff. So when you think of ways to make big mistakes paying off debt, this is heading to the pawn shop. This is liquidating a lot of things, a lot of assets. And depending on what you can get for it, it might bring you ahead a little bit, but trying to catch up on debt again with using something like a payday advance loan, doing something like a pawn shop, selling some things, whether it's marketplace, whether it's eBay, whatever it is, you are still not getting to the point of fundamentally adjusting that spending plan to manage the debt in its entirety. This can backfire because it's going to give you short-term money, but for the long term, it is not there. When you start pawning and really getting rid of some of your assets or some of the things that you love that you don't want to part with because you don't have any choice because of the debt you accumulated, there are better ways to do this. Now, we look at credit card advances. This is another one. When it comes to credit card debt, it is my biggest pet peeve that I have, period. When I look at almost $1.2 trillion in credit card debt, then you add on the percentage of roughly 25% that they're charging on that debt. It is insane the amount that Americans are paying on credit card debt on a regular basis. And I do see a lot of people that do cash advances. Now, cash advances, of course, are really tempting. Cards do have cash advance fees. On top of that, you pay the interest on those cash advance fees. And a lot of times with the interest that is paid, it's at a much higher rate. So it's kind of the trifecta of you over borrowing or overspending on that credit card. Now, in addition to this, I have seen a lot of people that are kind of, robbing Peter to pay Paul. What they've done is they're using their credit cards that are doing cash advances on there to make mortgage payments, to make student loan payments, to make auto loan payments. They are utilizing the credit that they have with on their card to pay the regular loans, which again, they should be budgeting for properly, but they've gotten to the point where unfortunately they can't. This includes, again, not even though getting those much higher interest rates, which if you look at your card and it's 25%, I have seen ones with cash advances that are 32, 35, even 36%, making it very, very expensive to do the cash advance. And of course, when it comes to debt, looking and filing for bankruptcy. Bankruptcies are on the rise. We've seen delinquencies on credit cards, delinquencies on auto loans, and a lot more people are filing for bankruptcy. And you have to know exactly what this means and how it means when it comes to bankruptcy. Because for a lot of people, one, do you qualify if you're going that route? Do you make too much money? Do you have a lot of student loans? Student loans are not going to be wiped out with bankruptcy. That was changed years ago, which means your unsecured debt you could wipe out completely. But with that, you are also wiping out your credit score. You're wiping out your ability to lend for a multitude of years, usually 7 to 10 years when it comes to bankruptcy. Could be very detrimental. So if you have any big life plans, and of course, we get back to the fundamentals of what got you to bankruptcy in the first place. Where is the budgeting? Where is the spending plan? How? And I have personally helped a lot of people stay out of bankruptcy, coming up with plans. So why could it be a mistake? This, of course, can be super complex. It can also be very expensive to do bankruptcy. It can take 6 months or more to complete the bankruptcy, again, depending on the complexity. And of course, credit counseling, compiling all of your credit reports, knowing exactly how much debt you have. This could be very difficult if you're looking to get a house in the near future. If you have bankruptcy, unfortunately, that is a no-go. For most financial industries, if you've declared bankruptcy within the last 2 to 3 years, they will do zero lending for you, meaning it is completely out the door. Now, when it comes to student loans, when it comes to mortgages, when it comes to auto loans, we talked about paying it with credit cards, and that is what I am seeing a lot, guys. We are seeing, again, just borrowing money from one place to pay another one, or a lot of people that are doing unsecured loans for, $5, $7, $10,000. And what they're doing is they're keeping everything else afloat. They're using the money to pay the mortgages and the auto loans because, again, they're not budgeting properly. These are individuals that are working full time. These are individuals that are earning $100,000 plus every single year, but they are still borrowing money to sustain the lifestyle they have because, of course, looking at some of these, I have seen house payments $2,500, $3,500, $4,500. If you're making a $4,000 mortgage payment every single month, it is crazy. And honestly, thinking about, mortgages being 20, 25% of your salary, that puts you in a whole nother level when it comes to being able to make that payment and make that payment very comfortably. For a majority of people that buy into that range, unfortunately, they cannot afford. They are way overspending, really overextending themselves when it comes to the price of the house, meaning that they are very, very hard when it comes to spending and really saving, budgeting, putting money into retirement accounts, 401ks. It really is kind of crazy when you look at that. Now, of course, when we think of people that can help with debt, You got to rely on your credit union, some banks, some financial counselors. A lot of people, including myself, I do financial counseling and I do it for free. There is no cost for financial counseling. It is something that we provide at the financial institution that I work at. It is completely free. Now, a lot of people go to different companies. There are companies that will help you manage your bills, that will help you manage your debt, but it comes with a very, very hefty fee. There's actually one that is going to remain unnamed. That takes 10%. You pay them, they work with your creditors, they take 10% of what you're giving them. So again, when you think about skimming off the top, they are doing exactly that. You have to be very cautious about it because a lot of people will recruit friends, family, other people to do the same for debt consolidation. And this goes back to a lot of places that are saying, we'll fix your credit score in 2 months. We'll fix your credit score in 2 weeks. Guys, it takes time to repair credit. There isn't a way that I know, short of having really wrong things on your credit report, then going in there. And of course, getting back to the fundamentals, like I talked about earlier, continuing to make charges and continuing to live on credit and live on credit cards. When you start focusing and wanting to pay down the debt, wanting to do the debt-free journey, wanting to really better yourself, you have to spend less, and you have to do this through budgeting, through your savings plan, through anything you can do to cut out the expenses. For some people, it seems like it is an impossible task, but honestly, when you take a very hard look at your budget, looking for anything you can cut, and even at that point, it's not going to be the Dave Ramsey beans and rice. It's going to be to the point where you want to cut expenses, and you can cut expenses, and you might have to do it temporarily, a week, a couple months. Get everything in line, get all of your finances in line, because when you start looking bottom line, if you're running your budget into the red every single month, that is going to catch up with you very, very fast. And there's going to be a point where you can no longer pay the bills that you have because you've been running into the red for so long. Now, of course, a lot of people, when they start looking at the red, when they start getting to this point, they stop contributions into emergency funds. They cut the retirement going down to zero, no company matches, no anything. That is kind of, again, a really, really big drawback when you're trying to pay off debt, trying to make essentially the most money you can. And again, this goes back to Dave Ramsey's baby steps, where when you look at the first one, saving $1,000 and then pay off the debt like it's really wildfire, putting every single dollar you have over to that baby emergency fund, that first 1,000 rate into debt can make a big difference. But again, I personally would not stop the contributions when it comes to the 401k, at least bare minimum that company match, and then focusing on, because what happens if you're not putting money into the 401k plan, if you're not looking at that company match, you're really focusing on paying off this debt. It could be 3 years, 5 years, 7 years, 10 years. You might never get to the point of putting money back into that 401k because for whatever reason, you can never conquer the debt. You can never get to the point where you're actually net positive, being able to start those contributions again when it comes to paying off debt. So guys, that is going to do it for today's video. There are a lot of mistakes that people make when they're paying off debt. But if you have any questions, if you need any help at all, definitely let me know in the comments. Subscribe to the channel if you like the content that we're putting out, and I'll catch you in the next video.